Hey everyone, welcome back to Corporate Decoded, the place where we uncover the hidden stories in the financial world. Today we're diving into a filing from Churchill Capital Corp IX, a company that deals in a bit of a unique business model. Stick around because this one has some interesting takeaways about how these special purpose acquisition companies operate. Before we dig in, if you love getting clear, unvarnished truths from these corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we chat about these filings and more. Alright, so what we have here is what is called an 8K filing. Think of it as a company's way of reporting a major event that the public needs to know about right away. It is not a regular check-in like a quarterly report, but more like a bulletin board for important announcements. This particular filing is from Churchill Capital Corp IX. Now these are often called SPACs or special purpose acquisition companies. What they do is they go public to raise money with the goal of finding and buying another company merging with it, and essentially taking that private company public. It is a bit of a shortcut for businesses looking to list on the stock market. The company's publicly traded units are made up of ordinary shares and warrants. Warrants are like options. They give the holder the right to buy shares at a certain price in the future. It is a way to attract investors by offering potential upside. This filing mentions that these units consist of one Class A ordinary share and 1/4 of one redeemable warrant. And specifically about those warrants, each whole warrant allows you to buy one Class A ordinary share for $11.50. This is a key detail for anyone holding these warrants as it sets the price at which they can exercise their option. The really important date here is the 19th of December 2025. This is when the main event we're going to talk about happened, the company's annual general meeting of shareholders. What exactly happened at this meeting? Well, the shareholders voted on a few things, but the big one was approving who will be their auditor for the year. This proposal was to confirm or ratify the choice of Withumsmith-Brown PC as their independent public accountants. Think of the auditor as the company's financial referee. They check the books to make sure everything is in order and reported. Honestly, it is a crucial step in maintaining trust with investors. And how did this vote go? The results are pretty clear. Over 28 million shares voted. A massive 28,245,577 votes were in favour of keeping Withumsmith-Brown. Only 794 votes were against it, and 125,000 shares abstained. What does this tell us? It basically means the shareholders are comfortable with the auditor choice and have confidence in the financial oversight process. It is a strong endorsement. So the proposal was definitely approved. This is pretty standard procedure for most companies, but it is good to see the shareholders actively participating and giving their stamp of approval. It reinforces the idea that the company is following proper governance. Now, looking at this filing from a broader perspective, Churchill Capital Corp IX is in the business of finding a target company to merge with. The fact that they are holding annual meetings and ratifying their auditor means they are actively operating and preparing for whatever their ultimate goal is, perhaps identifying that acquisition target. The high percentage of shares represented at the meeting shows good shareholder engagement, which is a positive sign for any publicly traded entity. This report doesn't give us deep financial performance numbers for an operating business, because Churchill Capital Corp IX is primarily a shell company focused on a future transaction. However, the smooth approval of their auditor suggests a stable operational footing for the SPAC itself. The key risk for investors in a SPAC is always whether it will successfully identify and merge with a suitable company, and if that merger will create value. The auditor ratification is a small but necessary step in that ongoing journey. So what is my take on this particular filing? It is a routine but important update. The key takeaway is that Churchill Capital Corp IX is ticking the boxes it needs to in order to operate as a SPAC. The shareholder vote on the auditor was overwhelmingly positive, which suggests confidence in the current management and their processes. The big story for any SPAC investor isn't in these individual 8K filings, but in the eventual announcement of a merger and the subsequent performance of that combined entity. This filing tells us the machinery is running, but we are still waiting to see what it will produce. Alright, that is our look at Churchill Capital Corp IX's latest filing. What are your thoughts on SPACs and their role in the market? Let me know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate deep dives. And seriously, check out that Discord link in the description. It is a great place to connect. Thanks for watching. See you next time.